Medicare tax calculations, married filing separately. Up to this point, we have talked about Medicare tax for singles as well as married filing jointly. So this is the third segment for Medicare tax calculations. Scenario 1, a married couple, each making less than $125,000 per year. Their tax class is married filing separately. They are hourly wage earners and they are paid weekly. Let's say that Prawn makes $29.40 per hour and worked 48 hours that week. Sini makes $32.50 per hour and worked 45 hours that week. For this problem, we're only going to calculate Prawn's weekly Medicare tax. We're going to assume overtime hours remain constant for the year. Since filing separately, we can ignore Sini's information. First thing we're going to do is calculate the gross weekly income or pay for Prawn. Regular pay for Prawn is $29.40 per hour, as it's shown here, times 40 hours in a week, and that arrives at this number. Second thing is overtime pay, $29.40 times the 1.5 premium for overtime times the 8 hours worked above 40. We arrive at this number. We add the two together, we come up with this. We're going to calculate the gross annual pay for Prawn. So essentially you take this times 52 to arrive at this number. Since married filing separately and making less than $125,000 per year, as shown here, we're going to use simply the 1.45% Medicare tax. Now we're going to calculate Prawn's weekly Medicare tax simply by taking weekly pay times the 1.45% to arrive at this number. Scenario 2, you have a married couple each making less than $125,000 a year. Again, that's each, not as a household. Tax class, married filing separately, salaried exempt, which means no overtime, employees paid bi-weekly. Max makes $83,460 per year and worked 50 hours that week. RJ makes $118,560 per year and worked 48 hours that week. For this problem, we are just going to calculate RJ's bi-weekly Medicare tax. Again, pay close attention to how often the person is paid. Since salaried exempt person does not receive overtime pay. Since filing separately, we can ignore Max's information. First thing, calculate biweekly pay for RJ. If paid weekly, then we would divide by 52. If biweekly, divide by 26. So it's biweekly, we're going to divide by 26. So $118,560 for RJ divided by 26 pay periods comes up with this amount of gross pay every 2 weeks. Next thing is calculating RJ's Medicare tax for the pay period. It's $4,560 times the 1.45% to arrive at this number. We did not have to do any special additional calculations because we know that RJ made less than $125,000 per year. In this scenario, we still have married couple each making less than $125,000 per year. Their tax class is married filing separately. Salaried non-exempt employees paid bi-weekly. Pay close attention to this as well as this. Bobby makes $99,216 per year and worked 43 hours that week. Jay-Z makes $83,720 per year and worked 45 hours that week. For this problem, we're going to calculate Bobby's weekly Medicare tax. Since salaried non-exempt, they are both eligible for overtime pay. We're going to assume overtime hours remain constant for the year. Since they are filing separately, they're married filing separately, we can ignore Jay-Z's information. Since overtime eligible, we're going to convert salary to an equivalent hourly wage so we can figure out how much overtime is added to their regular paycheck. So Bobby's equivalent wage is $99,216 from here, divided by the number of work hours in a year to arrive at this hourly equivalent wage. The next thing we're going to do is calculate the weekly pay for Bobby. So Bobby's regular pay is $47.70 times 40. and that comes out to be this number. Bobby's overtime pay is $47.70 times the 1.5 premium pay for any hours worked over 40, and Bobby worked 3 hours of overtime. So Bobby's overtime pay comes out to be this amount. Bobby's weekly pay is simply the two added together. Now we're going to calculate Bobby's gross annual pay to determine the tax rate. We're concerned that Bobby might go over the $125,000 with overtime. We're not sure, but we're going to check. So gross annual pay is the weekly pay times 52 weeks, and that comes out to be $110,377.80, which is less than $125,000. So we're going to use the 1.45 Medicare tax. We don't have to use the extra 2.35%. Next step, calculate Bobby's Medicare tax for that week. So we're going to take the $2,122.65 times the 1.45% to come up with that number. However, Bobby does not get paid weekly. Bobby gets paid bi-weekly, so we have to take the weekly pay and double it. So that would be how much was taken out bi-weekly from Bobby's check. In this fourth scenario, it's a little bit different than the first three. Married couple with greater than $125,000 for one person, or at least one person. Tax class, married filing separately, salaried exempt, and paid monthly. Jam makes $145,000 per year and works 44 hours a week. PB makes $115,000 per year and works 54 hours a week. For this problem, we're only going to calculate Jam's monthly Medicare tax because Jam is paid monthly. Since married filing separately, we can ignore PB's information. Since both are salaried exempt, neither person receives overtime pay. But Jam does make over $125,000, so it's going to make things a bit more complicated. We're going to calculate Jam's total Medicare tax for the year. Since Jam is married, filing separately, and making more than $125,000 per year, we have to use the 2.35% Medicare tax for any amount over $125,000, which in this case, $20,000 over $125,000. So the lower rate, we're going to take the $125,000 times the 1.45% to come up with this number. The higher rate is the $20,000 above the $125,000 times the higher rate to come up with this number. We add the two together. So that's total Medicare tax for the year. To determine the amount that Jam should pay each month, we simply divide by 12. So we take this number, divide by 12, and arrive at $190.21 every pay period, or in this case, each month. In this last scenario, we have a married couple with at least one of the people in the marriage making more than $125,000 per year. Their tax class is married filing separately. They are salaried, non-exempt, and paid bi-weekly. RJ makes $114,400 a year and works 44 hours a week. Mimi makes $117,520 a year and works 45 hours a week. For this problem, we're going to calculate RJ's bi-weekly Medicare tax. Since married filing separately, we can ignore Mimi's information. Since salaried non-exempt, they are eligible for overtime pay. And we're going to assume that overtime hours remain constant for the year. Since overtime eligible, we have to convert RJ's salary to an equivalent hourly wage. So we take the $114,400 divided by the number of work hours in a year to arrive at an equivalent hourly wage of $55 an hour. So we're going to calculate RJ's weekly pay. Regular pay is going to be $55 an hour times 40 hours in a week to arrive at this number. Overtime pay is going to be $55 times the 1.5 premium pay times 4 hours over 40 for the overtime pay to arrive at this number. Gross weekly pay is simply adding these two numbers together. Before I go to this next step, you may think, well, I don't have to apply the 2.35% premium over $125,000 because RJ makes less than this. However, we have to determine if overtime pushes RJ over the $125,000. So next step, must check to see how much RJ actually makes in a year. So we take the weekly pay times 52 weeks to arrive at 131,560, which is above the 125,000. So we have to use the 2.35% Medicare tax for the amount over 125,000. We're going to calculate the Medicare tax for RJ for the year. So we use 125,000 times the lower rate to arrive at this number. And then there's $6,560 above the 125,000. We have to multiply times the higher rate to arrive at this number. So the total Medicare tax for RJ is going to be this much. So to determine how much Medicare tax is paid for a biweekly period, we're going to take this number and divide by the number of pay periods, which is 26, to arrive at $75.64 per pay period.